Welcome to my weekly market roundup, 12th December 2020. I am Sagar Nandi, retired IT professional, swing trading stocks using Q systems and techniques that I developed myself. You may contact me using my email ID, tradingprofitably@gmail.com. These are the forums where I regularly share live market and stock analysis. My website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use in my actual trading, and I will use the same systems in today's session, and these are the underlying platforms on which they run. That was the last slide. I'll continue with the live system. Let's look at the global markets. For looking at the global markets using market indices, I am using Q Global running on Metastock. I have the weekly, daily, the default Q at a glance template setup. That is the template I use for analyzing all trades, whether it is stocks, futures if I am trading futures, not much, or if I am analyzing market indices. I wanted to point out one thing, that sometimes if you want to use the full screen to view the charts, you may go to view and choose full screen. That way the Q global screens can be viewed in full screen mode. It will give you more clarity on the charts probably. And then you will see a pop-up, close full screen. If you want to go back to the Q Global with Metastock menu, you may click close full screen. That will go back to the default startup setting. Sometimes I watch the charts in full screen mode, and I have set up all the Q important tasks on the menu bar. So I don't really need the Metastock menu bar. That is why sometimes when I am trading, I switch to full screen mode. You see the Metastock menu is gone, but the Q menu is still there, the custom menu. So I have access to all the different Q functions, and of course I have access to P, the power console, where I can go to run explorers if I want to. There is also another option to view the charts in full desktop mode. So if you have multiple monitors, let me click and see. Yes, now I am using two monitors, and I resized or rearranged the charts. Now the Q weekly daily is filling up my both monitors. One monitor is showing weekly, one monitor is showing daily. Usually I don't do that. I just use the full screen mode sometimes. Let me close full screen. That you may find useful sometimes. Now let's continue with the global market analysis, starting with Australian index AXJO. In the weekly, the candle shape is bearish and color changed to neutral. We have a short watermark level here. 2 weeks ago also price could not close above that. It created an upper tail candle, and this week again it has created an upper tail candle at the same resistance level. Interestingly, in the daily it created a bearish headwind at that same level earlier. This week price tried to go above that, however failed and reversed, creating a false upside breakout, and it displayed the bearish headwind signal again. That was Thursday, and on Thursday it also displayed the bear release signal. That met all the requirements of a box short trade setup on Thursday and also a headwind short trade setup. You could take a short position in AXJO. Of course, it is an index. If you are not able to trade the index, you could look for equivalent ETFs or individual stocks. Now, this headwind signal is an extreme reversal signal. It is trying to catch the very top of the recent up move. Headwind signal is an essential component of the headwind reversal setup. However, that is not all. As you know, there is a checklist associated with all the Q trade setups, and those checklists are mentioned on my website sagarnandi.com. If you go to this checklists page, there is a checklist associated with all the trade setups, and headwind is one of them. When the headwind signal comes, you may check the checklist to see if all the conditions are met. And if all the conditions are met, then you may take a headwind short setup, and those conditions were met on Thursday. It was a headwind short setup, and it was also a possible box short setup. Now, box short setup has a requirement of very or extreme high activity, which was not present on Thursday. However, we may note that this is an index, it is not an individual stock. Therefore, we may relax the criteria of very or extreme high activity for a box setup when we are looking at an index. When you are looking at the headwind short setup, which is an extreme reversal short setup, and box setup, which is a double top or triple top reversal short setup, one way to take the trade is to use short vertical. Because it's a bearish trade, it will be using short call vertical. There are certain advantages of using short call vertical for a bearish trade. When the headwind signal comes, headwind setup comes, instead of taking the short using the stock. Why? Because the short call vertical has limited risk, and you don't have to worry about a stop loss. Because it is an extreme reversal trade, the trend is not in our favor. It is not trend is your friend kind of trade, reversal trade. So it is possible that it will go up a lot, but that is unlikely probably if the headwind setup comes, but it may go up a little bit to stop us out if we trade it using the stock. But if we are using short call vertical, we will not be stopped out. Eventually it will usually come back. Will it come back every time? No, but it will come back enough times to give us an edge, and all those reversal trades using short call verticals will likely end up in a profit. You could take such a reversal trade probably here also if all the checklist conditions were met using headwind setup. I am not sure if on this day all the conditions were met, meaning the weekly conditions were met or not. I am not sure. But on Thursday it was met, and Thursday you could take a short trade using short call vertical. Right now we have bearish shape candle in the weekly, and the traffic light candle color is bearish after displaying a bearish headwind signal. Therefore, we are not going to look for any long trade. As of Friday's close, we are not going to short it. That will be one day too late. And for Q traders, one day is too much of a delay. We would like to take the trade when the signals are confirmed. That is, the trade could be taken on Thursday's close or Friday's open, but not at Friday's close. That is one day too late, and Q traders would probably pass it on Friday at the close. It is still in an uptrend. Let's look at the Japanese index topics. By the way, though I explained the headwind setup on Australian market, it is obvious to everybody that the same approach is applicable to US stocks or Chinese stocks or Japanese stocks, Indian stocks, any market, any country. The technique is the same so long as the instruments are liquid. Japanese market topics index. Here the weekly is moving sideways for 3 weeks inside a range. This week's candle shape and color both are bullish. Topics also displayed a bearish headwind a few days ago, and since then the high has not been taken out. The watermark that was created by the headwind signal has not been breached. Again, on this day, probably we didn't have a headwind short trade setup because the weekly did not meet the required conditions. But you can see that if the conditions were met, taking a short call vertical works pretty well because time decay will be in your favor, and all these days, probably 2 weeks, have passed and price could not go up, so the time decay would also help your trade. Right now it is having a bullish shape candle in weekly and daily both. Colors are also bullish. So I expect the price to continue to go up at least for a few days to hit the upper boundary. However, there is no Q trade setup because it is too close to the upper boundary level. Both Australian and Japanese markets are bullish. What about Chinese market? CSI 300 index. Here the weekly is not so bullish. Here the weekly color is magenta, backdrop color is bearish. For Australia and Japan indices, it was not bearish in color. Here the color is bearish in weekly and it has displayed a bear release signal. Shape is also bearish, though it has a small lower tail. In the daily, it pulled back little bit, stopped at these trend line supports and also at the yellow direction line. I rely a lot more on the trend lines because they have zero lag, whereas the yellow and white direction lines, which are similar to, but not exactly, but similar to 50 and 100 days moving averages, they have delays. So if I am looking for trading at the support, buying at the support, I rely a lot more on the memory trend lines. They work almost like a magic. Overall, Chinese market is also in an uptrend. There are several ways to recognize that. One easy way is to see that there are only support trend lines, memory lines. There is no resistance memory trend line coming from the top. That shows instantly that it is continuing to be in an uptrend. When an instrument is at the very high, like CSI 300 is now, if it starts to change from uptrend to downtrend, what will happen? First, the memory support lines will be broken. They will be gone, and then memory resistance lines will start to form. That will be a telltale sign that the trend has changed. Right now it is supported by memory trend lines, therefore I am not going to look for shorting opportunities. Instead, if price could go up from one of these two memory trend lines, not the third one, that will be probably a bit too far. But if it could bounce from one of these two nearby memory trend lines, then I could look for buying opportunities in fundamentally strong stocks. I keep on taking such trades and I share them on the forum. You might start to try such trades also if you are not doing that already. That will be using the concept of bounce technique, looking at the index for a possible bounce but not trading the index, drilling down, finding fundamentally strong stocks in outperforming industries and buying them. Overall, as we can see from the memory trend lines, it's continuing to be in an uptrend. Interestingly, it also displayed a bearish headwind signal. Again, the setup was probably not there because the weekly might not meet the required conditions. Therefore, I am not suggesting we could take a short trade here, but just for understanding the technique, if we wouldn't, but if we took a short call vertical at this time, the way I mentioned, price went up little bit, a short stock position might get stopped out. But because we prefer short call vertical, we would not get stopped out, and then price pulled back. Time decay was in our favor, and the delta move would also end up being in our favor because price actually closed on Friday below the low of our signal day. So we would profit from the short call vertical trade in this case also, even if the weekly didn't meet the required conditions. Therefore, when weekly is meeting the required conditions, you will find probably that your success rate is even higher and you are reaching the profit target faster. What is the profit target? If you are using short call verticals, one approach is to book profit at 50% of max profit. What I do sometimes, if I see I have reached 50% of max profit and the stock is continuing to move in my direction, I may watch the stock and not book profit immediately. And if I see it is stalling there, then I book profit. Sometimes I may book half profit at 50% and try to book the remaining half at 80% of max profit. Let's look at the next global index now, Footsie index, UK market. Here the weekly has an indecisive candle, probably perfect doji. Let's check out. The weekly open is 6550.23, closing 6546.75. Pretty close, not perfect, but it is weekly candle. It's very indecisive, and after a long up move, those are always times to be cautious. Those are not necessarily bearish signals, but an indecisive, or rather I should say very indecisive candle in this case after a significant up move is something to watch out for. And on Friday we have a bearish headwind signal in Footsie as well. We saw that bearish headwinds came in Australian market index, Japanese index, Chinese index. UK index didn't have it so far, but it displayed that on Friday. Just to take note of, there is no bearish setup at present, but to take note of the bearish headwinds. The last global index that we studied that was continuing to be the strongest of the all global markets, that is India's Nifty 50, and that is continuing to be the strongest, super strong, moving inside a narrow range in the weekly chart, but that narrow range is continuing to go up. The daily is also continuing to go up. There was a bearish headwind earlier, however the candle shape was very bullish. If the candle shape and the headwind signals are contradicting each other, then we don't put so much importance to the headwind signal. Prices continued to move up on Friday and Thursday also. We have indecisive doji candles. However, the weekly is very bullish. There is no sign of weakness. It is continuing to be the strongest of the global markets. Now let's look at the USA market. For the USA market, I'm going to use Q Elite on TradeStation, same weekly daily at a glance template, and I'm going to use the market ETFs. By the way, if you wanted to increase the space on your Q Elite, what I'm doing now, you might try later on your installation. Press Ctrl Shift Alt T, T for title, easy to remember. Ctrl Shift Alt T and see what happens to the screen. T for title. It removed all the title bars and thereby gave me a little bit more space to view the charts in a bigger size. I showed a technique on Q Global on Metastock how to have more space for the charts, and this is the technique to use on Q Elite if you are using Q Elite on TradeStation. Again, Control Alt Shift T, and if you press Control Alt Shift T for title again, it will bring back the title bars. I don't need the title bars usually because my sonar or radar and scan and different charts are linked, so I can as well hide the title bars. Let's start with the USA market study. S&P 500 index, SPY, weekly indecisive shape, indecisive neutral color, supported by memory trend line. Daily in clear uptrend, just like the weekly, supported by memory trend line. I tweeted both on Thursday and Friday in the morning session asking whether it was going to break the trend lines, and it didn't. And when it didn't break the trend lines, instead it reversed from the trend line. For example, on Friday, you could look for a reversal trade right at the lowest point using fine-tune chart. And if I go to the fine-tune chart, let me first move to daily interval, draw a support line at the trend line point, change to 5-minute interval. I might be accurately drawing it more accurately during trading, but in any case, when price came at or very close to the trend line support, you could look for a valid trade setup, a reversal trade setup, and you might consider taking a long trade using futures if you are trading futures. I don't trade futures much, if at all, because I don't like the leverage. You could take a long trade in S&P 500 E-mini futures on this bar when it gave a bullish flow candle. Or you could try to look for heavy activity. Let's say, yes, heavy activity and bull release signal that would be using the concept of bounce setup or maybe even box setup. In this case, bounce setup probably because we already knew that the trend line support was there at the longer interval chart, daily chart. And I see another bull release signal is there. That was not with high activity. So you could probably take the long trade right at this point, or if you wanted to wait, and that waiting would also be safer probably, you could take it at the next bullish flow candle. Your stop would be just below the daily trend line support. That was not breached, and your risk would have been this much even if you took the trade at the bullish flow candle, and your profit would have been, of course, much higher than the risk. You may or may not trade futures, but if you are even looking to enter a long position in a stock, and that stock has a trend line support, memory trend line support in daily or weekly, you may wait for price to come to that support and take the trade as it is reversing, not catching a falling knife, not catching when it is continuing to go up. Wait for some bullish signal like a possible bounce setup, or wait for a kind of go with flow trend following long setup, but on a intraday chart, 5 or 10-minute interval. That will give you extremely low risk trade. It's a swing trade, but the stop on the first day, entry day, will be using 5 or 10-minute interval. Profit will be actually using daily interval, because we are precisely entering a swing trade, not a day trade. You could use this technique for day trade also. I am not a big day trader. I use this technique for precisely entering swing trades. Reward risk is much higher, and they tend to work very well because of the memory support in the longer term interval. Looking at the memory supports holding, you would not think of taking any short trade. Looking at the weekly and daily supports, I would rather think that it will go up next week, at least for a while, to hit the upper boundary. However, there is no Q long trade setup because the traffic light candle color is red. I might look for buying opportunities in individual stocks that are giving a proper setup, that might have given proper setup on Thursday or Friday. And I shared some such trades. If I have time, I'll review some of them. That was SPY. Let's look at QQQ. In an uptrend, weekly and daily both has trend line support. The trend line support in daily held very nicely both on Thursday and Friday. It seems that price will go up next week, at least in the beginning, though there is no long trade setup in QQQ itself. Dia, again, in an uptrend, has excellent trend line support in daily. No long setup, no short setup, but it is bullish. And IWM, this also has trend line support. In daily, indecisive shape candle on Friday. Weekly shape is also indecisive. Bullish, very bullish actually, the strongest of the market ETFs, shown by the relative performance very sharply, almost 90 degrees, almost unbelievable. Very strong in the weekly chart, sharply going up. This may not go up forever. It may pull back a little bit. Last week I shared a forum post suggesting, and that is what I am doing, I am not taking so many long trades. I did take a few on Thursday or Friday, but I am not taking many long trades. I am waiting for the extended condition to go away. And if I change the weekly chart template on Q Elite using the hotkeys Alt Shift B, B for backdrop, the thrust and jump, both of them are hitting the red dots now in the weekly interval. That is too overextended. It may continue to go up for a while, but it is likely that it will pull back somewhat. One reason IWM is outperforming so much is because there were many undervalued stocks at a lower price point, and now that the vaccine is coming out. It's being approved by many countries. USA also approved one of the COVID vaccines. Those undervalued stocks, undervalued in terms of Q fundamentals and at lower price level, those are starting to move up. Some of them are moving very sharply, and that is contributing probably to this extremely sharp up move of IWM. If we hypothesize like that, then we may not think that it is going to pull back anytime soon, because those stocks are still at a lower price level. Some of those are in energy stocks and some of them are in non-energy stocks also. For example, education services. I'll look at education services later. Because they are undervalued in terms of Q fundamentals and still at a lower price level, it is possible they will continue to move up and IWM will continue to outperform the other ETFs. It is looking very bullish, extended but bullish. All the market ETFs are bullish. However, not everything is so rosy if we look under the hood. And we may look under the hood using the Q edge advanced decline breadth for the sectors to stocks from 1 month period to 1 day period. Whether we look at the sector advanced decline, industry advanced decline, or stock advanced decline, there is very evident gradual deterioration of breadth from 1 month to 1 week. Until last week, this was not obvious, but this week it is very obvious. There is no doubt whatsoever that the breadth is reducing. Now this is interesting because it is not visible from the market ETFs, and that is what makes Q Edge very valuable tool. That is one reason I am cautious. It is likely that the breadth will come down a little bit. All the market ETFs were too extended. Even now they are too extended. Though the market breadth has reduced from 1 month to 1 day on these Q Edge charts, looking at the market ETFs, I think that next week, at least for the first few days, market will go up. But after that, it may pull back again. May or may not, I don't know. But the market ETFs are telling that at the ETF level, it will probably go up in the first few days of the week. Still, the market breadth deterioration is leading me to keep my same view that it is not a time to take many long trades. The long trades I am taking are in undervalued stocks, in industries that has some reason to go up if the vaccine is successful. But I am not buying stocks that are already overvalued or already at a very high price level. One of the stocks I mentioned recently in my forum post, CRE. Well, okay, forum post or Twitter. Where did I mention it? Let's go back to the home, search for CRE. This one, 10 days ago. I mentioned that I would not buy this weak fundamental stock at the jump thrust extreme today. That was 10 days ago, December 2nd. There was no bearish setup. The market is looking very bullish. It is not the time to start taking short trades unless it is for hedging purpose. But I noticed at that time, 10 days ago, that semiconductors industry and otherwise very strong industry. At that time, its score reduced and on that day it turned negative. Then I was looking for overvalued stocks with negative earnings growth on a weekday for semiconductors industry, and I found CRE. Earning quality is also not that good. I looked at the charts. There was no bearish setup, short setup, and neither did I suggest shorting the stock. However, I looked at the extreme overbought condition in the weekly chart shown by thrust and jump. When I see that, I avoid buying stocks like that. That is the condition I am seeing in IWM now. So I am cautious about buying stocks inside IWM which are also showing thrust and jump red dots in the weekly interval. Of course, there was no short setup if we applied the Q unambiguous checklist, but I wouldn't buy CRE 10 days ago. I could have bought at this point using the trend line support, the technique I described a while ago. And I think this also had a bullish flow. Yes, it has a bullish flow as well. So this would be the low risk entry point using Q technique. I suggested not to buy it. Why? Because at the right edge, the weekly thrust and jump were at the extremes. I didn't short it also, but let's look at CRE now. Ten days ago would be somewhere on this candle. After that, price tried to go up. However, this week the candle closed with bearish shape candle with very long upper tail, and right on the day it made probably all-time high. It displayed a bearish headwind signal. Therefore, the theory or hypothesis that when it hits the red dots in both thrust and jump in the weekly interval on a chart, it is better not to take a new long position worked out. Why do I mention it? Because other traders who are breakout traders might think of entering a long trade on this day when it broke out of the narrow range with a very bullish shape candle and with very high volume as well. Many traders are fond of trading breakouts with high volume. So they might have taken a long trade on this day, but using the Q guideline, Q traders would not. I would not. And that would help us. I take breakouts with high volume, but not when thrust jump are hitting red dots. And isn't it amazing? The bearish headwind came on the day price made all-time high. If you look back, there was a bearish headwind on this day, and the technique that I mentioned you could apply at that time also. I'm not sure how the weekly looked like at that time, but if I for now just look at the daily on this bearish headwind day, if I took a bearish trade using short call vertical, price came down and that trade would make very large profit due to delta move as well as time decay. If you look back, there was a bullish headwind here. If we took a short put vertical, it would give sizable profit when it went up to this high. Then it pulled back, the profit would erode. However, time decay was in our favor. If we didn't hit the 50% profit, 50% of max profit at this peak, we might continue to hold. As price went up, we wouldn't get stopped out and we would for sure hit 50% of max profit. I think we would easily hit 80% of max profit in the long positions we could take at this point using the bullish headwind signal using short put vertical. Stock would not also get stopped out probably depending on where you put the stop for the stock position. However, from these charts, and you may study more charts where you are seeing bearish headwind setup. I am not suggesting taking a trade just based on the bearish headwind signal. What I described just now is for studying the technique, but I am suggesting you may initially maybe you take on simulation. When you see a confirmed headwind trade setup, use a short vertical For bearish headwind, short call vertical. For bullish headwind, short put vertical. And you may study the charts. There are times, not very rare in fact, there are times it will pull back again, and that is why it is important to keep enough time for the vertical structure. How much time? You may study the charts first of all to decide, but I think at least 45 days or maybe even 2 months. That way you are not in a risk of getting stopped out in a hurry or expiring right when you have a small loss. If you give 45 to 60 days to expiry and take a short vertical position, this reversal trade works quite well. And you don't have to worry about stopping out like you would if you traded it using stocks. Again, if you notice, I am using options to manage my trades. I am not using options to take their leverage benefit. I am not doing that. I am not using simple call or simple put. I am using verticals or maybe shorting the put or taking synthetic lock positions, but I am never using the leverage. I believe leverage is not necessary, at least not for myself. It's not necessary. I am happy with the normal leverage that stockbrokers offer. I think 50% in the USA market. Other markets may give no margin, but that is fine for me. I don't want to use the margin or leverage to take my trades. So I described two concepts while discussing the markets today. One is how to take short or long verticals when the headwind signal, not signal, I should say when the headwind setup comes at the extremes. Another concept I described that when the weekly thrust jump both hit the red dots, don't take a trade, may not take a trade in the prevailing trend direction even if you have a good looking breakout. Those breakouts may or may not work out. It is too risky to chase a trade when the thrust jump both hit red dots in the weekly interval. And IWM is hitting red dots in weekly interval for both thrust and jump. That's another reason to be cautious. And IWM has displayed the bearish headwind also, though there is no setup at present in the short direction. So we looked at Atge. The breadth is deteriorating. If we look a bit more into detail, the sector performance on Friday, 2 sectors went up, 9 went down. Which ones went up? Communication services, but it is practically unchanged. Didn't really go up. So we can say unchanged, 0.05 percentage up move. The other one that went up is utilities. A few days ago, I was chatting with one of the Q traders, and both Harry, I think it was Harry and I both noted on our own that utilities was the strongest sector on that day, but utilities was weak for a long time. And again on Friday, utilities was the strongest sector. So these are the times I am starting to look for turnaround candidates in the sector. On that day, a few days ago, when utilities was also the best performer, I looked for a trade setup. I didn't find any. Today I have not analyzed. We may try to look for low risk buying opportunities in fundamentally strong stocks in utilities. In any case, coming back to the sectors on Friday, practically speaking, 9 went down, 1 was unchanged, only 1 was up, and over Thursday, Friday both, 3 are up, 8 are down. That shows the deterioration in sector strength. However, if we look at the longer interval, over 1 month, it is still very bullish, 10 are up, 1 down. Over 2 weeks also 10 up, 1 down. Over 5 days it is bearish. 4 up, 7 down. It's gradually coming down. Over longer term it is still bullish. However, Q traders don't look at 10-day period, 1-month period to decide swing trades. They look at 5-day period and then 1-day period or real time period, because all the Q systems are in real time to decide trades. It's good to know that over 1 month, over 10 days it is bullish, but I'm not going to take long trades because they were bullish earlier. I'm going to look at the current situation, and the current situation is that market breadth is deteriorating. Though the market ETFs are bullish, so there is no scope of taking short trades yet, just to be cautious on the long direction. Now let's look at the week to week sector comparison chart that I share every week. I create those charts using Atge. These are the two charts. The left hand chart is from 1 week ago, right hand chart is for the current week. Both the charts show comparison of sectors of the current week, red bars, and the previous week. So 1 week ago, sectors were very bullish, and 1 week before that, that is 2 weeks ago from now, it was even more bullish. That was a picture from 1 week ago. What happened this week? The red bars are more on the left side of the zero line. So this week the sectors are bearish overall. 4 sectors went up for the week. They are energy, communication services, healthcare, industrials. Industrials barely went up. So we may say healthcare, communication services, and energy is again the best performer. If we see healthcare is up for 2 successive weeks. In fact, all these sectors are up for 2 successive weeks. And if we look at industrials in the previous week's chart, it was up that time also. So industrials is up for 3 successive weeks. Healthcare up for 3 successive weeks. Communication services up for 3 successive weeks, and of course energy is up for 3 successive weeks. Energy is the best performer by far, week after week, for all 3 weeks in a row. Best performer by far. And you could identify the turnaround in energy sector using Atge. That is what I am trying now for utility sector. We'll have a look at that later, but let me share another chart I created using Atge. That is a week to week sector comparison, but this time using the alternative sectors. Usually I don't use the alternate sectors, I just use the primary sectors. Why? Because primary sectors and industries provide a better granularization of industries, at least, so that I can focus on more focused industries, more concentrated, more granular industries. Granular is the right word. But sometimes I use the alternative sector performance. Why? Because in alternative sector there is a sector classification that is not in the primary sector, and that is this one, academic and educational services. This is a very useful feature of Atge, that I or you are able to look at sectors using multiple classifications, and by doing that we don't miss any opportunity. Visually you can see academic and education services sector is the second best performer this week, and last week also it was up. Now energy is of course the best performer in alternative sectors also. However, energy has been up for a while. It's not a turnaround candidate anymore as a sector. Whereas academic and education services is just turning around. That is why sometimes I look at alternative sector to keep an eye on this particular sector. All the other sectors you may find from the primary sector itself. So this is what I noticed, and I found that from here. Let's refresh the data in alternative sector in Edge sector 2 tab, and over 5-day period I'm double clicking to sort by the performance. You can see energy is the energy is the best performer, and academic and education services is the second best. And energy was strong for a while. It did turn around. It was the weakest and now it is the strongest for 3 months onward. On Friday it dipped a bit, dipped a lot actually. It became the worst performer. We'll have to see if it is one day dip or not. In any case, I noticed that academic and education services was very weak earlier. It was the worst performer in the alternate sector score, and now it became the second best performer, second best, not best, second best performer over 5 days. So I kept an eye on that. You may drill down into the industries using the cog button from the sector scorecard, or you may directly go to the stocks. In this case, I am directly going to the stocks belonging to the sector, clicking the peer analysis button, and all these stocks are undervalued stocks. All the stocks in S&P 1500 belonging to the education services sector, all are undervalued. Some of them have excellent earnings growth also. I would prefer to buy these top 2 stocks because they are star candidates in terms of fundamentals with great valuation and earnings growth, provided I have a good technical trade setup. However, I am okay to buy any of them, any of these stocks, because they are all undervalued. I am okay to buy either based on valuation or based on earnings growth. If both conditions are met, even better, but I am perfectly okay to buy based on any one of the valuation or growth criteria. So what I did when I saw that this sector was turning around, and by the way, this sector has, in fact, if I drill down, this sector has only one industry. Let's drill down to the industries. It has only one industry in alternative industry. So that was okay for me to go from sector to stocks directly. I didn't have to look at the industries because I knew this sector had only one underlying industry. If the sector was turning around, the industry was also going to turn around. Now I could look at these stocks, and I found one trade setup in STRA. But let me go through all of them to explain why did I choose STRA. Will STRA make profit? That I don't know. But it looked like a good setup. And let me explain what I am doing. I am highlighting all the stocks. I could do by highlighting anywhere, clicking and dragging. I am clicking the grid or table or radar action button to copy the ticker symbols, going to TradeStation, Q Elite, and pasting them using Ctrl V or right click, paste. Let me go through all of them one by one. APEI, the weekly is indecisive, but backdrop color is bullish. Daily is at trendline support. If it goes up from the support, gives a bullish flow candle next to it, that may give a go with flow long trade setup, and there is no resistance nearby. Even the upper boundary is safe distance away. if the stock goes up next week, it will give a buying opportunity using the trend following long trade setup. But it didn't give a setup on Wednesday, Thursday, or Friday. That was when I shared this stock STRA, but I'll come to STRA later. Let me go through the other stocks to explain why didn't I choose the other stocks. This is ATGE. The weekly is bullish. Daily gave a long trade setup on this day. I didn't look at the sector on this day. On this day, I could look for a buying opportunity in ATGE using the go with flow long trade setup. And by Friday's high, probably I covered almost the risk distance. The sector is still looking okay. On Friday, the sector relative strength declined a little bit. The market was also weak. However, I think it will probably go up and hit at least the memory trendline resistance. But I was not looking at the sector on this day. I was looking at it. We'll look at the forum later, the exact date, probably on the last 3 days, one of those last 3 days. So that was too late for me to take a long position on ATGE. But it is looking strong. Now, one reason not to take ATGE, or if you take not hold on to it for a long time, is because it has a trendline resistance. If you wanted to hold it for a long time thinking that vaccine is coming out and all these education services companies, all of which happen to be undervalued, will have a longer run, and you want to hold it for a longer time, not just close after risk distance is covered, then this is not the best choice because it has a trendline resistance in daily as well as weekly both. LOPE, again it has trendline resistance nearby. And when I was looking at the stock one of the last 3 days, it had already gone up somewhat, so I didn't have a low risk entry opportunity. My stop would be far away. I would not like to buy a stock like that where stop is far away. So when I looked at the education service stocks in one of the last 3 days, I wouldn't consider buying LOPE. PRDO again didn't give any long trade setup in the last 3 days, and there is a trendline resistance. Now let's look at the forum post. Why it is useful to look at the forum post, so you know how I analyzed it on that day, not looking back and saying that you could have done it or would have done it or I could have would have done it. This is what was actually done by a Q trader, analyzed at least by a Q trader using live charts, and the Q trader happens to be me, but it could be you. This was shared one day ago, December 11th, and I think I used the signal of December 10th. I shared it at 9:50 a.m. So what was I doing? I was getting a confirmed signal on 10th December, and instead of taking the trade at the close on 10th December, I was taking the trade next day in the morning session using fine-tuned chart. So the signal day, as we call it, signal day in Q technique was 10th December. The entry day was 11th December in the morning session. How was the chart, the 360 analysis looking like? Let's look at them. I always try to share them. The industry, and this sector has only one industry, I showed you. Industry was beautifully turning around. You don't get any better turn around than this. And in real time, on that day at 9:46 a.m., it became one of the strongest, 143 score out of 147 industries. However, I don't usually look at the number, I just look at the color, and the transition of color from magenta to cyan over multiple periods, it was clearly a turnaround candidate. And as you trade more and more and you focus more on turnarounds, be it in terms of industry turnaround, fundamental turnaround in terms of earnings growth, and technical turnaround, which would be any of the Q trade setups, because they are always catching the lows. They are never breakout setups. The four setups that I have described on my website with unambiguous checklist, they are not breakout setups. They are all turnaround setups in the sense they are catching the low. So this was industry turnaround, and I found STRA at that time. Excellent valuation, excellent secondary valuation. Earnings growth declined in the latest quarter. However, over yearly periods, in spite of the pandemic, not sure if the yearly, I think yearly result must be out during the pandemic period, because 1 year is already gone since COVID-19 started. So though the pandemic was there for more than 1 year, the earnings growth for the yearly periods is holding steady. In fact, slightly improved from 30% to 46, steady at 40%. And the revenue growth is also holding steady on the yearly periods, 31% to 48%, and then improved even more. So they are doing very good job, I would say. That revenue growth actually increasing during pandemic period, earnings growth holding on to the high level. Great valuation. If you look at the percentage change from 10 days to real time on that day when I shared it, steadily positive. Makes money, it's not a losing company. Money losing company, has a dividend yield of 2.49%. Not very high like some of the energy stocks, but not negligible also. So there were many reasons to consider buying it, and the required condition for me is at least undervalued or earnings growth, and it was earnings growth in the yearly period, not in the quarterly, but undervaluation was there. And then I looked at the chart at that time. Interestingly, weekly displayed a bullish headwind that caught the very low. Since then, price is gradually going up. When I shared it, the weekly shape and color were bullish. If you look back, daily also displayed a bullish headwind here. Again, I am not sure if the bullish headwind setup was there, but if you had taken a short put vertical at that time with enough duration, you could book profit here, or if you are still holding on to it, time decay is helping you. Again, I am not suggesting taking a reversal trade just based on the signal. Suggesting you try it on simulation when the setup is confirmed. Now there was a watermark support created by the bullish headwind reversal signal. Price retested that level and immediately went up, created a false downside breakout, and these are areas where weak hands are stopped out, and you may keep an eye on them. When a bullish headwind creates a watermark support, price tries to go below that and immediately reverses, you may start to look for a buy setup from there. And if you did that, you could probably buy the stock on this day. Was there a bullish flow? Yes, I think there was a bullish flow on this day or next day. So using the bullish flow candle on one of these 2 days, you would buy the stock with extremely narrow stop loss. And by this point or on Friday, you would have covered risk distance. You could buy using this technique. When a headwind signal comes that creates a support, then there is a false breakout of that support, you may start to buy at a low risk point, which would be somewhere here. That was the only time after the false downside breakout when we had a bullish flow, the first time. Now I shared it based on 10th December's analysis, signal day 10th December, that would be this day, when it had excellent trend line support in daily. price was at pendulum low. So in terms of price move also, it was a turnaround candidate. As I mentioned, I love to take turnaround trades. They are the lowest risk trades and they have the highest profit potential. It had a bullish flow. You could take it on 10th December at the close or 11th December at the open. And if you look at this stock, now you know why I chose it. Few reasons. One is fundamentally it's good enough. Technically, it created a false downside breakout starting to go up. It gave a very low risk entry point, and I noticed there is no resistance nearby. The next resistance is at around 125. Now price it at 97. So it has long distance to go before hitting the next trend line resistance. And even the declining white direction line is at 120. That is also about 20-25% away from current price level. And price regained the white direction. Sorry, not white. Price regained the yellow direction line. So there were many things in favor of the trade, and I chose STRA and shared it. We'll see how it plays out. I'm not expecting every trade to make profit. I'm just telling myself to do a disciplined 360 degrees analysis and base my trades on that. So long as you do that, I think, as I say, it is difficult to lose money in the market. Of course, we have to manage risk. Don't take unusual amount of risk in any trade. At least I don't do that. I try to take all trades with same risk, maybe 1% of my total equity size. Again, if you look back, how did I identify the trade? I identified based on alternative sector analysis. Not often used, but very useful tool nonetheless, because it has one sector that is not covered by many other systems, academic and education services, that was turning around, and I think I got a turnaround candidate in terms of fundamentals, sector industry strength, as well as technical turnaround. Fundamental, great fundamentals. That was one trade idea that I shared, and if you are following me on my site, you know the last few trade ideas were all on the bullish side. On some stocks like Cree, I had suggested to be cautious, not to buy at very high, but I didn't share any bearish setup. I did mention about XHB a while ago. XHB, let's look at that home building ETF. I might have mentioned it in the YouTube live sessions, or I might have posted it, and I said I found from Atge again that it was relatively weaker. Price had gone up a lot. This is the home building ETF XHB, displayed bearish headwind in the weekly chart 2 times by now. Again, if you use those bearish headwinds, let me align the two charts using workspace tracking. The bearish headwind came here, maybe sometime during the week. You could look at the daily chart to see if there was a short setup. There was probably none because we didn't have any double top yet. And if I now move to the second bearish headwind that came in the weekly chart, that might have come, I'm not sure, during the week itself. So you would keep an eye on the daily and you would notice a bear release signal at, by that time, triple top. But that bear release signal came on an indecisive candle day with an upper tail as well as lower tail. So you don't initiate any bearish position on that day. You take the bearish position on next day using fine-tuned chart. And what instrument could you use? As I suggested, you may try it out. Short call vertical. it was again an extreme reversal trade at triple top. And in the last few videos, I don't remember exactly which video, I did mention about this triple top in YouTube Live, and I also discussed with few traders. If you took a short call vertical, by now you would have pretty decent, I would say, probably more than 50% of max profit because of both delta move in your favor, that is the stock fell down, you had a bearish vertical position, short call vertical is bearish position, and you would also benefit from time decay. Is it bearish? No, it is not bearish. It is moving sideways. And these reversal trade setups that Q techniques have, whether it is box setup or headwind setup or bounce setup, you may consider taking them with short verticals. That way you don't have to, again, I repeat, don't have to worry about stop loss, and time decay would be in your favor. So I took a vertical trade, as I mentioned earlier, in XHB, and that is in a profit. I might have booked partial profit already. Let's look at home building industry strength. I didn't check that out this week. That is in consumer discretionary sector. The sector itself is weakening. Instantly we can see that from the scorecard. If I look at the underlying industries, home building is here. It was weakening, and now relatively it gained strength a bit. Does it mean it is going up? Probably no, because XHB is not going up, it is range bound. To have more clarity, we may look at the industry percentage, and now you see that it was going down faster earlier relative to the others. Again, the heat map instantly shows that earlier at this point and this point, it was one of the worst industries in consumer discretionary sector. Here I am drilling down into the consumer discretionary industries only. Over 2-month period, the color scheme instantly shows it is the worst performer. Over 10-day period, it is not the worst performer, because this one, computer electronics retail, more deep red, and general merchandise stores is also deeper red, but it is one of the worst performers. You can see that from the color coding. Over last 3 periods, it has relatively improved, but it is still down. The industry is not going up. So I could find a catching the top opportunity in XHB, and I could efficiently trade it using not the ETF but short call vertical. And I mentioned about the trade at that time. I don't have the habit of saying after the fact that you could do that, you could do that. I only share trades that I talked about earlier or shared earlier in the forum. So this trade also worked out well, and this is the technique I mentioned earlier several times, how you use the short verticals instead of the stocks to make your trades more efficient when the setup is reversal kind of setup. I described several techniques. It's sometimes useful for new Q traders, or sometimes even the experienced Q traders, to revisit the techniques, exactly how an experienced Q trader is using them. And here I am saying, of course, I am more experienced on Q systems. That is because I developed it. Okay. I think we have gone beyond 1 hour today, but I think it was useful discussion. Let's look at Finder now. The weekly Finder that shows the balance between bulls and bears using all the important Q signals. This week, all signals, overall it is bearish. Strength signals are bullish, and when we look at individual strength signals, we find out the reason because of large number of gap ups. However, after large number of gap ups, there were large number of reversals. So reversals are very bearish. Trend continuation signals 60% bearish, so it is overall bearish. And I note that there are very large number of bearish headwinds in the weekly interval this week also. I am always aware of that. When that happens, I slow down on buying, which I am doing now, and this I mentioned earlier also. So the weekly interval overall is not bullish now, and we saw QH market breadth also decline. And if I look at the Friday's picture, overall bearish. In fact, all the categories are bearish, including strength, continuation, and reversal. There are some bearish headwinds here also, but not very high as was in the weekly interval. What the market is therefore telling us is that it is bullish. When we look at the market ETFs, QH is saying that it is having deteriorating breadth, not a good sign for bulls. And Q Finder is saying your own trading universe technical breadth is bearish, at least for my technical breadth. That is, I'm using the liquid stocks in NSE, in NYSE and Nasdaq, and I'm adding the S&P 1500 stocks to that, running technical scan using Q Global, Q Finder scans, and it is giving me a breadth of the technical signals across 2000 plus stocks in my trading universe. That breadth is now bearish, both weekly interval, daily interval. So I'm cautious. And lastly, let us look at the market internals. Let's look at the composites. Nasdaq composite, NYSE composite, and the internals new high low advanced decline up down volume. There is no bearish signal in the weekly interval. All the three internals are positive. No divergence also. And for NYSE also there is no bearish signal. There is a bearish headwind though in the weekly chart of NYSE composite. Again, a sign to be cautious. NYSE jump is hitting red dots, but the Nasdaq jump thrust or NYSE thrust, they are not hitting red dots yet. So it may go up more. What is my outlook for the market then after looking at all this? Okay, let me look at one more thing, the last thing, that is the mega cap top 20, to see if there is any weakness there. Mega cap top 20, the custom index in Q global market breadth, it is underperforming the market, shown by relative performance tilting down. However, it is not bearish, it is just moving sideways. And like the market ETFs, it also has trendline support. So I am not going to be bearish on the mega caps. Now we may conclude, or I may conclude my market outlook. Market ETFs, mega caps, and market internals all are bullish. When all of these are bullish, I cannot take bearish trades. Market breadth is deteriorating. However, that is not allowing me to take short trades because of the trendline supports in individual ETFs, and you will find the memory supports in market futures also, mega caps also. We saw that just now. Not bearish. Certainly market is very bullish. However, deteriorating breadth and the bearish headwinds coming in multiple stocks, market level instruments also, leading me to be cautious. I'm still buying some stocks, like I mentioned in education services. I might have shared some more ideas. Whatever with the market condition, using the industry rotation, sector rotation, you may find great turnaround candidates. And you may try them out and see if they do better than other techniques you might have used earlier. I didn't have a webinar on last Wednesday. Probably I made up for that today. I'll try to have the next webinar again on Wednesday, 8 a.m. Eastern Standard Time. Thanks a lot for joining. I look forward to seeing you in my Wednesday session. Have a great weekend. Keep safe and trade profitably. As I always say, no reason not to do that. Thank you.